Over the last 20 years, I've observed one big trend in food business in India. 20 years ago, people in India would hardly go out for lunch or dinner. But gradually, we have seen a big trend of people eating out. Especially if you look at the fast food sector in India, there's a huge rush in organized fast food companies like Domino's, Pizza Hut, KFC, McD, and so on. And this is something that I'm sure you all would have observed. I mean, 20 years ago, we have not even heard the names of Domino's, McD, but today we can find these chains of restaurants in every major city of India. However, there is still immense growth potential, especially in Tier 2 and Tier 3 cities of India, as young folks in small towns still aspire to eat at Domino's or McD. And this trend of eating out is only increasing over time. A, because today people are busy with their work and they do not find a lot of time to cook food. Hence, they prefer eating out frequently. Currently, this trend is very prominent in metro cities of India. And B, today people are earning good money and more importantly, they don't hesitate to spend money on eating out. And C, the online food delivery market has amplified the food business growth as it has become very easy to order food at few clicks from home. So food sector in India has bright future. Especially the craze for branded fast food chain is growing quickly. The reason being that India is one of the youngest country in the world with nearly 50% population under the age of 25, and these young people love fast food like pizza and burger. So I won't be surprised if 20 years down the line, these chains of stores like Domino's, Pizza Hut, KFC, McD are available in every major city and town of India as well as on every highway. Hey everyone, my name is Sahil and this is my Personal Finance Academy. In this video, I am going to compare 4 companies leading the fast food industry in India. These fast food companies are also known as QSR, that is quick service restaurants. But before we proceed, this video is only for educational purpose and only useful for long-term fundamental investors that have an investment viewpoint of at least 5 to 10 years. Alright, let's get started. So first company is Jubilant Foodwork. Established in 1996, Jubilant Foodwork holds the exclusive master franchisee of 3 international brands, Domino's Pizza, Dunkin' Donut and Popeyes, that offers fried chicken. Please note that Jubilant Foodwork has an exclusive right for Domino's Pizza in India and nearby countries, which means there can't be any other competitor. In addition to master franchisee, company has also forayed into homegrown brands like Ekdum in Biryani, Hong's Kitchen in Chinese food, and has also launched its own brand, Chef Boss, that offers a range of ready-to-eat pastas and gravies. Second company is Devyani International. Established in 1997, Devyani International is the largest franchisee of Yum Brands in India. Again, Yum Brands is an American company that owns KFC, Pizza Hut, Taco Bell, and so on. So Devyani International has a non-exclusive right to sell Yum brand products in India, where it operates chain of stores of KFC, Pizza Hut, along with Costa Coffee. In addition, company also has its own brand Vango that offers South Indian food. By the way, Devyani International is part of RJ Corporation that also own Varun Beverage. Then third company is Sapphaire Food. Established in 2009, Sapphaire Food holds non-exclusive rights to operate restaurant under 3 of its Yum brand, KFC, Pizza Hut and Taco Bell. Then fourth company is Westlife Foodwork. Although the company was established in 1982, it entered into a non-exclusive master franchisee agreement with McDonald's in 1996 to operate the chain of McDonald's restaurant in West and South India. So I hope now you got a clear picture of business and brand of each company. Now let us try to understand the network of each brand and how big is each company. So as of Q2 of FY23, Jubilant Foodwork operates 2,646 stores in India, Sri Lanka, Bangladesh and Nepal. Out of this, 2,579 stores are of Domino's, and within that, 1,701 stores of Domino's India spread across 371 cities, whereas Devyani International has 1,096 stores in India, Nepal and Nigeria, out of which 423 stores of KFC and 466 stores of Pizza Hut and covers 224 cities. Then Sapphaire Food has 658 stores in India, Sri Lanka and Maldives, out of which 302 stores of KFC and 349 stores of Pizza Hut. And Westlife Foodwork has 337 stores of McD in West and South India and covers 52 cities. So if you look at the store network, clearly Jubilant Foodwork is way ahead of other companies and ranked number 1 among all 4. It is followed with Devyani International and then Sapphaire Food and then Westlife Foodwork. Now in terms of competitive advantage, again Jubilant Foodwork has a strong moat because it holds exclusive master franchisee in India and nearby countries. It means no other company can start chain of Domino's, Dunkin' Donut and Popeye in India and nearby country. Whereas Devyani International and Sapphaire Food have non-exclusive franchisee and both are competing with each other as both operate same chain of Yum brands. Finally, Westlife Foodwork only has non-exclusive master franchisee in West and South India. So it doesn't even have master franchisee of entire India. Moreover, Jubilant Foodwork has also started 3 of its own brand. Ekdam in biryani, Hong's Kitchen in Chinese food and Chef Boss in gravies. Whereas Devyani International has one brand of its own named Wango and others don't even have their own brands. In terms of market cap, Jubilant Foodwork currently has a market cap of 34,000 crore. Devyani market cap is 22,500 crore, Sapphaire Food market cap is 8,700 crore and Westlife Foodwork market cap is 12,000 crore. So Jubilant Foodwork is again number 1 in terms of market cap, followed with Devyani International, then Westlife Foodwork and finally Sapphaire Food. By the way, I also had a look at the management of each company and they all have solid background and experience in QSR segment. I don't want to get into the details as this video would become too long. Now before we proceed, we have a partner for this video. It's M-Stock by Mira Asset. It is a trading platform that is disrupting the traditional brokerage sector with its zero brokerage model. All you need to do is pay a one-time fee of $9.99 and you can make unlimited trade without any brokerage. It includes your free intraday trading, free delivery, free F&O trades. Basically everything free for just one-time fee of $9.99. And if you open a Demat account with M-Stock, you just need to pay a one-time amount of $9.99 and your Demat maintenance would be free for life. So basically you pay a total of $19.98 and all your trading is free and your Demat maintenance is free for life. And since M-Stock is a part of global Mira Asset Group, it brings 25 years of legacy and experience of 15 countries. M-Stock platform is built on advanced technology that can process thousands of orders per second and provides you with stable platform and a seamless experience. This is a great option for those who trade frequently and even for investors who are looking for an alternative low-cost trading account. M-Stock has also launched margin trading facility at an interest rate of 7.99 to 9.49%, which is one of the lowest rate in the industry. If you want to explore M-Stock, I have provided the link in the description box. Now, as far as future growth prospects are concerned, as discussed, there is immense growth potential in QSR market in India. There's no doubt about it. And these QSR chains know it. Hence, all 4 companies are expanding their store network and innovating their food menu. Although it won't be a smooth ride for every company because there is already a lot of competition in food sector and now with the advent of cloud kitchen, the competition has only intensified. Moreover, Indian demography is unique. There's a different taste preference in every state. So these QSR chains would have to continuously innovate and design their menu as per the taste preference of Indians across the geography. Any failure to meet the taste preference would result in store closure. Moreover, it is not just about growth. It is also about growing profitability and having a solid financials. And for that, you need a right supply chain with right distributor, vendor, a proper inventory management, a good customer service, a good tech platform and lot more. Hence, let us compare the financials of each company and understand which company has the strongest financials. Now let us first start with revenue growth comparison. So Jubilant Foodwork revenues have grown from 2,583 crore in FY17 to consistently at 3,000, 3,500, 3,900. Although there was a dip during COVID, again it has improved and latest revenue is 4,943 crore. Devyani International revenues have grown from 1,048 to 1,500. Then there was a dip during COVID. Again it has improved to levels of 2,667 crore. Sapphaire Food revenues have grown from 957 crore to 1,100. Then there was a dip and latest revenue is 2,113 crore. And Westlife Foodwork revenues have grown from 931 crore to 1,500. Then there was a dip, then again it has improved. So revenue latest stood at 2,042 crore. So in terms of absolute number, Jubilant Foodwork revenues are way ahead in terms of business and scale at 5,000 crore, followed with Devyani at 2,667. However, I also tried to look at the revenue growth from pre-COVID level. So Jubilant Foodwork revenues have grown at 38% from your 3,563 to 4,900. Devyani International revenues have grown at 108% from pre-COVID level. Then Sapphaire Food has grown at 77 and Westlife Foodwork has grown at 46. So in terms of absolute number, Jubilant Foodwork is way ahead. However, in terms of revenue growth, Devyani International has grown fastest in last before COVID level. Next, if we look at profit growth, Jubilant Foodwork has always been positive its profits have grown from 58 to 196, 318. Then there was a dip during COVID. Again, it is improved and latest profit are 473 crore. Devyani International was in loss and it became profitable in FY22 and latest profit is 274 crore. Sapphaire Food was also in losses. Its latest profit stood at 143 crore and Westlife Foodwork was also in losses. Recently, it has become profitable with profit of 91 crore. Now, since except for Jubilant Foodwork, all three companies were in losses, so we really can't do a comparison. However, Jubilant Foodwork profits have grown at 48% from its pre-COVID level. Now, let us try to understand the profitability. So, in terms of margin, Jubilant Foodwork has been way ahead of its competitor. Its margins have consistently improved and look at it. Latest margins stood at 24%. Devyani International is at number 2 position. Again, its margins have improved and latest margins stood at 23%. Sapphaire Food margins were very low. However, latest margins stood at 20% and Westlife Foodwork margins latest stood at 16%. So, in terms of operating margin, Jubilant Foodwork is number 1 followed with Devyani. Then if you look at ROE, Jubilant Foodwork ROE has been consistently ahead. So if you look at pre-COVID level, it was 24.6%, then it fell down. However, latest ROE is 22.87. Devyani International ROE was haywire, but if you look at latest ROE, it was 22.5 and then latest it is 33.25. Sapphaire Food ROE was negative, but latest ROE is 13.3 and Westlife Foodwork was also negative. However, latest ROE is 17.67. Next, if you look at ROCE, Jubilant Foodwork is again consistent. It was 38.49 before COVID. Again, it fell down. However, latest ROCE is 18.78. Devyani International ROCE is 16.7. Sapphaire Food ROCE is 11. And Westlife Foodwork ROCE is 13%. So, in terms of ROE and ROCE, your Jubilant Foodwork is ahead of its competitor. Next, if you look at debt to equity, Jubilant Foodwork debt to equity is 1.12, Devyani International 1.7, Sapphaire Food 0.8, Westlife is 2.1. So overall, the debt to equity structure of all 4 companies is on higher side. However, your Westlife debt to equity is way high. Next, if you look at the cash from operation, all 4 companies are generating good amount of cash. Jubilant Foodwork having the highest scale is generating highest amount of cash and its latest cash stood at 930 crore. Then Devyani International latest cash from operation is 451, Sapphaire Food is 395 crore and Westlife Foodwork is 171 crore. So overall in terms of financials, Jubilant Foodwork has much stronger financials with higher operating margin and higher ROE and ROCE and much higher cash generation. It is followed with Devyani International. Although in terms of growth, Devyani and Sapphaire Food have grown at faster pace than Jubilant Foodwork since pre-COVID level. In terms of debt structure, all of them have slightly high debt level. Now let us look at the share price movement, valuation and shareholding pattern. Now if you look at the share price movement, Jubilant Foodwork has generated great returns since its IPO in 2010. So if you look at it, adjusting the stock split and bonus, it was 23 rupee and from there it is currently at 519. So more than 20 times jump. Interestingly, if you see during COVID, it saw a sharp jump in share price and the share touched the levels of highs of nearly 881. And from there, from October 21, the share has jumped, fallen to levels of 41%. So there's a more than 40% dip in Jubilant Foodwork share price. Next, if you look at Devyani International, company had its IPO recently in August 2021 at price band of 90 and from there, currently it is trading at 187. So the share has already doubled in last 1.5 years. Next, if you look at Sapphaire Food, it had its IPO recently in November 21 at levels of 1200 and from there it is at levels of 1380. So there's not much movement in Sapphaire Food. And finally, if you look at Westlife Foodworld, it had its different name of Westlife Development and from there it changed its name recently. If you look at the share price movement, it was around 329 and from there it has become 777. So in last 5 years, the share of Westlife Foodwork has doubled. Now let us try to understand the valuation of each company. So this is the P ratio of each company. Jubilant Foodwork after 40% correction is trading at levels of 72. Devyani International after doubling from its IPO since last year is trading at P ratio of 80. Sapphaire Food P ratio of 61 and Westlife is the costliest with P ratio of 133. In terms of price to sale, Jubilant Foodwork is 6.8, Devyani International 8.4, Sapphaire Food is 4.1 and Westlife is 5.9. So overall, if you look at it, in terms of valuation, all 4 companies command a premium valuation majorly because they have a very bright future. However, comparatively, if you see Sapphaire Food PER comparatively lower as compared to other 3 companies. Next, if you look at the valuation, let's understand what DIs, FIs and promoters are doing with the company. So promoters of Jubilant Foodwork have kept their shareholding constant since last 12 quarter. Then FI's holding increased from 32.65 to levels of 41.2, 41.7, and from there's a consistent fall, and latest it is 28.6. However, on other side, DIs have increased their shareholding from 10.63 to 11, 15, 17, and latest it is 19.7. Next, if you look at Devyani International, again promoter holding is constant at 62.8. Then FIs also hold shareholding and it has increased from 6.87 to 8.3, and DIs have increased the shareholding consistently from 4 to 5, then 6, and latest it is 7.47. Then if you look at Sapphaire Food shareholding pattern, promoter holding is also constant at 51.27. FI holding has reduced from 15.98 to 12.6, and DI holding has increased from 8.57 to 10, 12, and latest it is 16.7. And Westlife, if we see, promoter holding has reduced from 62 to 56, FI holding has reduced from 17 to 9.8, and DI holding has increased from 9.3 to 24. So net if you see, in all four companies, DI are consistently adding their stake. So in this video, we have tried to look at various parameters to compare four leading QSR companies of India: Jubilant Foodwork, Devyani International, Sapphaire Food, and Westlife Foodwork. If you look at the future prospect, all four companies have bright future. Although in terms of competitive advantage, Jubilant Foodwork is well positioned due to its exclusive master franchisee in India and nearby countries, whereas others have non-exclusive franchisee. Also in terms of business size and scale, Jubilant Foodwork is much bigger than other companies. In terms of financials also, Jubilant Foodwork is ahead of competitor. However, the catch is that in the last few years, since pre-COVID level, Jubilant Foodwork growth has slowed down as compared to other companies. In terms of revenue growth, Devyani International is growing fastest. As far as valuation is concerned, all four companies command a premium valuation. Although Sapphaire Food is slightly better in terms of valuation. Finally, in terms of shareholding pattern, all four companies have a decent promoter holding, and both FIs and DIs hold a significant share in each company, and interestingly, DIs are buying all four companies. So it is really difficult to pick one stock out of these four. I believe that all four companies have bright future potential and looks like SIP grade stock. But if I have to prioritize them in terms of my preferred pick, I would place Jubilant Foodwork on top. Also because I am a big fan of their cheese burst pizza. Although I know that there is a sharp correction in this stock and technically it is in downward trend, but its future is certainly bright. Then my second pick would be Devyani International, followed with Sapphaire Food and then Westlife Food. Now you tell me, which is your preferred stock among all four? And if you want me to analyze any of these companies in detail, then do let me know in the comments. Also, if you want me to compare any other companies in the similar sector, then mention it in the comment. Friends, it is not easy to do such comparison because I have not restricted my analysis to financials. I have tried to look at each business, promoter, competitive advantage, and many more data. So I hope you'll appreciate my effort. And if you find my video useful, do like and share the video. And if you haven't subscribed to this channel, then you might want to consider subscribing because there's a lot more quality content coming up in the near future. But only if you are a long-term investor. I'll see you next video. Till then, take care.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.